Most investors don't understand the difference between owning Bitcoin and buying a Bitcoin ETF. Picking the wrong one can cost you money, security, and control. Today, I'm explaining exactly what you need to know to make the right choice. Bitcoin investing has grown tremendously, but you have two main ways to invest. First, real Bitcoin. You own the coins directly. Second, Bitcoin ETFs. You own shares in a fund that tracks Bitcoin's price. Both options have advantages and drawbacks. By the end of this video, you'll know exactly what fits your goals, risk tolerance, and long-term strategy. First, let's go over ownership and control. Real Bitcoin, you own. You're the owner. You have control. You control the private keys, meaning you fully own your coins. Cold wallets are safest. Hot wallets are convenient but riskier. A few of the pros: you're in full control, independent of banks or funds. The drawbacks are you're responsible for security. Lose your keys, you lose your Bitcoin. Now let's go over Bitcoin ETFs. You don't own Bitcoin directly, the fund does. Fund managers hold and secure the Bitcoin for you. The pros are there's no need to manage wallets or keys. The downside is you're exposed to counterparty risk. If the fund fails, you could lose access. Second, fees and cost. First, we'll go over Bitcoin's fees. Fees include exchange fees, network fees, and wallet cost if using cold storage. Also, there's no ongoing management fees. With Bitcoin ETFs, there's annual management fees range 0.4% to 1.5%, and brokerage commissions may apply if your account isn't commission free. ETFs are convenient but cost more long term. Real Bitcoin has upfront costs but minimal ongoing fees once secured. Now let's discuss accessibility and liquidity. With Bitcoin, you can buy through exchanges like Coinbase, Binance, or Kraken. Also, selling or transferring can take minutes to hours. With Bitcoin ETFs, you can trade on stock exchanges like any other stock. Also, it can be bought or sold instantly during market hours, and it's ideal for retirement accounts that don't allow direct Bitcoin. Always remember, ETFs are easier for trading and retirement accounts. Real Bitcoin takes effort but gives you full control. Now let's talk about tax considerations. With Bitcoin, selling is taxed as capital gains short term at ordinary income rates, long term at a lower rate. Sending between wallets usually isn't taxable. With Bitcoin ETFs, they're treated like stocks for taxes. Capital gains and dividends reported through brokerage statements, and they're easier if held in tax-advantaged accounts. ETFs simplify taxes. while real Bitcoin requires tracking transactions but can benefit long-term gains. Now let's go over a few security risks to always consider. With Bitcoin, your private key loss is permanent. Cold storage prevents hacks and phishing. Don't leave large balances on exchanges long term. With Bitcoin ETFs, fund managers handle security. You avoid private key risk but accept counterparty risk. Always remember, with real Bitcoin, you have full control but requires diligence. ETFs offer convenience with slightly higher dependency on the platform. That brings us to which one to choose. Choose real Bitcoin if you want full control, you're prepared to secure your private keys, you're investing for long-term storage. Choose Bitcoin ETFs if you want simplicity and instant liquidity. You're using retirement accounts or brokerage accounts. You prefer professional management and don't want to worry about keys. A quick bonus tip: always remember, a hybrid approach can work. It all depends on your risk tolerance. Another thing is, a lot of people like to keep a portion in real Bitcoin for long-term security and another portion in ETFs for liquidity and easy trading. This balances control, access, and risk. It all depends on how conservative you are and what your long-term plans are. Always remember, investing, has its own risk. But if you want to invest, both real Bitcoin and Bitcoin ETFs have pros and cons. Your choice depends on your goals, risk tolerance, and comfort with managing crypto. Start by evaluating how much control you want versus convenience. Also, we have a free referral link in the comments page below, where you can get $15 worth of free crypto from Coinbase. It's a win-win. Also gets a referral bonus, so it works out for everyone. But if you're wanting to go over specific platforms and to use, we always recommend Coinbase at Josh Lozer Investments. And if you want to use Coinbase, there's actually crypto you can invest in. If you want to invest in, ticker symbol BITX, which is what we invested in earlier this week. It's a Bitcoin ETF. A lot of volatility there. It's been trading, between 3% and 8% every day. It's up 8% today. A lot of volatility, So if you're more aggressive, that might be the way to go. If you're more conservative, you can just put your money in Bitcoin for the long term. Always do your own due diligence with these things. See what's right for you. We'll be making another video next week. If you have any questions or comments, feel free to leave them in the comments section. We'll be more than happy to answer. And also be sure to check out our stocks video. We got another one we're going to be uploading this week on the best stocks to invest in for 2026. Basically, we're talking about companies with moats and a great way to diversify your portfolio. We talk about real estate, stocks, and Bitcoin. So be sure to check those out when you get time. I appreciate everyone watching the video this week. Please hit the like and subscribe, and we'll see you back here next week.